Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching IndianOpen. Let's go straight to the headlines at this hour. The IMF has cut its global growth forecast for the current year to 3.3% from the earlier 3.5%. The figure is the lowest since the global financial crisis a decade ago. Oil prices fell the most in 2 weeks after Russian President Vladimir Putin indicated no further need for production cuts. Vodafone Idea's 25,000 crore rights issue opens for subscription today. The management is confident that the company will not need additional funds post this issue. And pilots of Jet Airways have sent a legal notice to the new management, setting April 14th as the deadline to clear their dues. Well, let's take a look at the trade setup for the day. The big news, of course, as we said in our headlines as well, that some more growth pangs and that's impacted world markets. So what's happened? IMF has cut the global growth outlook to the lowest since the global financial crisis. They've seen that growth is seen softer across major economies and the risks are skewed to the downside. Now, when comments like these happen, you don't expect markets to still ignore them and stage a really good day or remarkable day of trade. So fall they did. The S&P 500 falling for the first time in the last 9 odd sessions. Dow having a second day of a correction. Nasdaq correcting about 0.5% as well. So it wasn't a happy hunting ground for the US markets. You like seeing trending markets. You like seeing markets move up. When they take a pause and fall for the first time in 8, 9, 10 sessions, then that's not something that traders typically tend to like. But that's what happened. We did fall. And that's the thing. The streak, the winning streak of sorts has been broken. It's also percolating down to what the rest of the world is doing. So if you look at the Asian screen, it's awash with red. Maybe not a deep red, but awash with red nevertheless. And the SGX Nifty indicating a start that could be marginally in the red as well. Interestingly, not too much of change that happened in the OI positions or the trader positions in trade yesterday. Remember, day before yesterday, we were looking at the Nifty Bank starting to having some bit of shorts that got covered, I think, because the Nifty Bank open interest remained unchanged. The Nifty OI was up about 1%. We had a decent outing in trade yesterday, particularly in the late trade on fairly decent F&O volumes as well. But nothing too dramatic that happened in positions that really merits further analysis. What did happen though? A couple of things. One, this robust subscription to Polycab IPO seems to suggest that well-priced issues or well-priced secondary market stocks as well do tend to find favor. And it's further strengthened by the continuous set of flows from the foreign institutional investors. So another 1,212 crores that came into trade yesterday. The only thing is the DIs continue to sell. So that's a number that you got to monitor. But by and large, the momentum from the FI side doesn't seem to have been broken. We were talking about how good a month March was and whether after hitting 18 times, 19 times, would April see a bit of a pause? Maybe except for a day or two. I don't think we've seen too much of a pause in the first 5 or 6 trading sessions in the month of April. However, all of this notwithstanding, we will start off slightly softer, but there'll be a couple of stocks that one should monitor. It's not a very news-heavy day, but 3 or 4 stocks that I thought are interesting in terms of news flow or stock reaction. So firstly, Mahindra & Mahindra, and this is reports stating that Ford and Mahindra will form a new JV in India. M&M will hold about 51% stake. Ford to hold about 41% stake in the joint venture. We had done a story around this some time back. But this is news, fresh reports that have come in. Let's wait and watch what happens. We'll, of course, already written to Mahindra & Mahindra. Let's see if they have to respond to this piece of, not news really, but reports. This is a BQ Blue exclusive. There's a block deal likely in HDFC Bank at an indicative price range of 2219 to 2287, which would be a small discount if it happens at a lower price to yesterday's session. So maybe a 2 or 3% discount at which the deal could happen as well. It's not a very large deal, 2,500 crores. Yes, the amount may sound large, but for a size of HDFC Bank, nothing too dramatic. But let's wait and watch what happens to HDFC Bank. I believe Deutsche Bank is the lead broker, lead banker to this deal. And then amongst brokerage stocks, CLSA has downgraded Century Ply. They have downgraded the stock to a sell from a buy. The price target has been cut to 174 from 195. Valuations are reasonable, but they believe that the lack of earnings may lead to a muted performance. Now, remember yesterday what happened when one of the stocks was downgraded. That was the big boy Asian Paints, and the stock corrected 3%. Do watch out for Century Ply. I'm not saying it will do an encore, but it could remain under pressure today because of this CLSA downgrade. Let's tell you what's lined up on First Word today, though. It's a collection of the top editorial stories that we believe we should bring to you. Vodafone Idea's rights issue opens for subscription today. Sumit tells us if it makes sense for the retail investor to participate in in India's largest rights issue so far. Yatin then joins in to talk about what could cushion the fall for auto ancillary players in the fourth quarter. Sajid tells us why portfolio managers breathed a sigh of relief in the month of March. A long time, and Yash Upadhyay joins in to tell us why it's changed the fortunes for some stocks. And we wrap it up with IMF's chief economist Geeta Gopinath explaining what prompted the think tank to downgrade the growth forecast for the third time in 6 months. Start off with specific news. Vodafone Idea's 25,000 crores rights issue opens today. The money raised will largely be used to deleverage the balance sheet, but that might not solve all of the telco's problems. So what are investors signing up for? Sumit Sarkar has put together an analysis. Morning, Sumit.
Good morning, Neeraj. So if we see, the rights issue is currently priced at a discount to the current market price. So whether to invest or not in this rights issue is not the right question to be asked here, but the question that actually an investor should put an eye on, or should be asked on investors, whether after investing in this rights issue, will the share prices generate any return for the shareholders. And that is because if you see, when the merger was announced, the promoters of the company had valued the merged entity at close to 130 rupees per share, but now they are raising funds at just 12.5 rupees per share. Now this fall in valuations for Vodafone Idea was because of stiff competition, worsening financials and a delay in merger. But even after this fall in valuation, the street remains divided on whether the share prices of Vodafone Idea will generate returns over the next 12 months period for an investor. Now Samir Kalra, the founder of Target Investing, says that he's advising investors to oversubscribe in the rights issue because he's expecting a change in the company post this rights issue, and it will generate returns. That's what he believes. But if you see, Devin Choksi and Avinash Shekhar, the head of research of Joindre Capital, now they say that this rights issue is apt only for investors with a long-term horizon, and they do not expect the company to generate any returns at least for the next 5 years. Also, nearly 12 analysts of the 25 who have been tracking the company have a sell rating on the stock, while 7 have a hold rating on the stock. And the 12-month return potential for Vodafone Idea is close to only 10%. So what I've tried to do is I've tried to call out the list of all the negatives and the positive factors that could work for the company and could impact the share prices of the company going forward. So firstly, on the negative side, if you see, even post this fund infusion of close to 25,000 crore rupees, the leverage of the company is expected to remain high. Now the proposed fund infusion would lower the company's debt by only 20%, and its leverage ratio would come down to close to 26.5 times. But the company is also in process to sell its stake in Industars, which is valued at close to 5,500 crore rupees, and is also expecting to realize close to 8,400 crore rupees as merger synergies, which would boost its EBITDA in financial year 2021. However, despite these efforts, the leverage would still remain at close to 9.1 times for Vodafone Idea, which would still be higher compared to its peers like Bharti Airtel and Reliance Jio. Also, many analysts believe that the current fund infusion won't be sufficient for the combined entity, and it might need another fund infusion going forward in future. Now, because of this current fund infusion of 25,000 crore rupees, we are seeing an equity dilution of close to 70%. So another fund infusion would lead to a further equity dilution, which would be again negative for the minority shareholders. Now, along with this, customer losses and financial losses could also work against the company going forward. Now, if you see in the last 9 months, the company has lost close to 3.5 crore active subscribers due to competition in the telecom market and because of its intention to focus on high-paying customers. Now, if this continues, that the overall revenue growth for the company could continue to remain weak going forward. Now, if you see in the first 9 months of financial year 2019, the company has reported a net loss of close to 15,000 crore rupees. Moreover, for the next 2 financial year at least, the consensus estimate of around 23 analysts tracked by Bloomberg, they are expecting the company to report losses at least for the next 2 financial year, that too close to 15,600 crore rupees and close to 13,000 crore rupees for the next 2 financial year. Now, these continuous losses would not only erode the net worth of the company, but also put financial stress on the company's balance sheet and the leverage ratio. So these are the kind of negatives that could work against the company and could stop the company to generate returns for the shareholders.
But industry dynamics have changed a little bit, right? I mean, there are some improvements at the margin that we've seen. So can this reflect in the financials for Vodafone Idea as well?
Well, on the positive side, yes, some of the industry dynamics have changed. There are possibilities of tariff hikes. But firstly, if you see the company, now we spoke to the company yesterday, now they clearly said us that this fund infusion will be the last one and they would not need any further fund infusion going forward because they have this 25,000 crore rights issue, they have the stake sale in Industars and the sale of fiber asset, which will ease out the funding concerns that is there on Vodafone Idea. Also, they do not believe the company would require another round of fund infusion. So that is one thing that could work for the company. Along with this, the company is also expected to report a marginal revenue growth starting from the fourth quarter of financial year 2019 on the back of rising 4G subscribers on its network and due to the steps taken by the company to improve its average revenue per user. Lastly, if you see, analysts are also expecting a tariff hike to come in place going forward, and that would in turn benefit Vodafone Idea. In fact, the company is also expecting a tariff hike because you see currently the company, the telecom industry is seeing a lot of cash loss, and this hike in tariff could actually come in from the Reliance Jio side, who was the first one to cut the tariffs. So they are also expected to be the first one to hike tariffs going forward, and that would be because of a likely rollout of 5G and the monetization of a tower. Now, these two activities could nudge Reliance Jio to go ahead and hike its tariff, as it will increase its cost for the company. So these are some of the positive factors that could actually work for the company and could lead to a share price return for the shareholders in future.
Okay, Samit, thanks so much for explaining that to us. You can understand that the opinion around what would happen to Vodafone Idea would always be split, as would the case with a lot of other stocks, but particularly in the telco space. But maybe you got some insight into what to do if indeed you are a shareholder and were contemplating whether or not to invest in the rights issue. Moving on, automakers haven't had the best time in the last few months, and well, it's expected to have had a ripple effect on all the ancillary manufacturers. But analysts tracking the sector say that there may be 2 factors that may cushion the fall for some of these auto ancillary players. Yatin Mota is here to take us through the details. Yatin, good morning. Normally, one would think that if autos have done badly, ancillaries would also do badly. Yeah. Why is that the exception?
So Neeraj, first of all, let's talk about the auto companies in Q4, what exactly happened. If you look at car makers like Maruti, M&M, Tata Motors, all of them have seen a decline in overall sales for the 4th quarter. If you look at, Maruti, Suzuki and Tata Motors, we have seen a 1 to 5% fall in volumes. If you look at two-wheelers, the situation is even bad. Hero MotoCorp or probably Royal Enfield have seen double-digit decline. Of course, the standout performance had come in from Bajaj Auto, which is not only has improved sales but also has gained market share. But talking about the commercial vehicle players, on the other hand, all of them have seen weak sales. Volvo, Eicher, M&M tractors, M&M trucks and buses. All of them have seen decline coming in. In fact, all of these have seen double-digit volume decline. So in an obvious scenario, we could expect auto ancillary to do slightly weaker than what their auto companies are doing, because at the end of the day, most of them are OEM suppliers. But according to a poll that we carried out, including some of the select brokerages as well as select auto ancillaries which are under coverage, the large ones, will not see that kind of an impact on their profitability. Of course, in the 4th quarter, we are expecting auto companies to report a steep decline in profitability. That could not be the case for auto ancillaries like Amara Raja, wherein all of the brokerages are expecting a strong double-digit 20% plus kind of a growth on the EBITDA. We have considered EBITDA for the simple reason that since it's the 4th quarter, there are a lot of anomalies which happen below the line. So we are trying to stay above the line around that operating profit mark, so that we can conclude decisively that there is no such big impact of the slowdown in the auto industry coming in for the auto ancillaries. Similar is the case with Exide. wherein we are expecting that the revenues could grow, and not only that, the EBITDA could also grow in high single digits. In fact, if you look at Morgan Stanley as well as Deutsche Bank, they are expecting a 6 to 5% kind of a growth on the EBITDA front. If you talk about Bharat Forge, that is one interesting play because it not only depends on the domestic market, but a large portion of their revenues are driven by exports. So if you look at the EBITDA growth in the fourth quarter for Bharat Forge, Morgan Stanley is expecting a 27% kind of a jump as far as their EBITDA is concerned, and Deutsche Bank and Edelweiss are slightly lower than them, coming in at 12 to 13% kind of a growth. Motherson Sumi, remember, not only India but Europe has also seen a sharp decline in car sales, and Motherson Sumi is one of the leading car component manufacturer. Their brokerages like Deutsche Bank and Edelweiss are expecting a marginal growth. Morgan Stanley, however, is slightly aggressive here with a 21% consolidated EBITDA growth seen for the fourth quarter. Of course, what is driving this? There are two key factors, Neeraj. Number one is the replacement market. In a scenario wherein new car sales are not doing well, probably the second-hand market picks up. More importantly, the replacement market is also there. So typically for a battery maker or a component maker, we have seen the replacement market or the a component market doing well. Of course, according to Kotak Securities, Amara Raja, Exide, the battery makers are expected to see a 8% sales growth for the aftermarket segment. Not only that, other auto ancillaries like SKF India and WAPCO, which are under Kotak's coverage, are expected to see a 9 to 15% growth in the aftermarket segment, which is quite healthy given the fact that overall auto volumes are down for the fourth quarter. If you look at the export markets also, a whole host of auto ancillaries which do export or operate in overseas market. So if you look at Endurance, their European operations are expected to see a 4% growth. If you look at Bharat Forge, a 17% growth is seen there for the export markets. Apollo Tyres, European markets, as the Hungarian operations ramp up, a 9% is seen there in terms of revenue growth. And also finally we have Varroc, which is a smart ancillary. One of their units, which is the lighting units called VLS, there also we are expected to see a 25% kind of a growth.
Okay, and what about the tire makers?
So Neeraj, if you look at the fourth quarter tire maker scenario, we are expecting that probably because of softer rubber prices, crude has also cooled off in the fourth quarter. There could be some improvement in profitability vis-a-vis the last year. However, if you look at the pricing, there is an issue because prices have come down sharply for tire makers and the realization could be impacted. But if you look at the sales growth, all of them are expected to see a sales growth of nearly double digits. So if you look at traction for Apollo Tyres, we are expecting a consolidated sales growth of 14%. However, profits would be lower by nearly 20% because of lower pricing and the margin pressure which is there because of the lower pricing. SEAT sales will be higher by around 8%, and similar traction we could see for MRF, wherein the sales growth is expected to be around 8%. So despite the sales growth, there is growth in sales in the aftermarket segment. However, because of the pricing pressure, we could see the bottom line suffer for all of these tire companies. But the takeaway here in this entire scenario for auto ancillary is that if you look at the revenue growth and EBITDA growth, despite the slowdown in the auto sector, we could see the export markets, the aftermarket or the component market doing really well for most of them.
Well, let's wait and watch, and hopefully it does work for them, because the slowdown in autos seems to be right here to stay. Yatin, thanks so much for putting that into perspective. So that's the scenario of the auto ancillaries. You always look at autos, ignore auto ancillaries. Now you've got a lowdown of what could happen to them in the near to the medium term as well. I can tell you what happened in the near term to portfolio managers though. They recovered from the losses incurred in the first 2 months. That's the next piece on First Word today. They posted an average return of 6.5% in the month of March. The performance was the best in over a year, but failed to beat the benchmarks, of course. Sajid Magat is standing by with a scorecard. Sajid, good morning. For a change, you are talking about positive returns put up by the portfolio managers.
Yeah, this only in the month of March actually. March has been a very good month from an equity index point as well. If you look at the monthly returns of these benchmark indices like Sensex and Nifty, it's been the biggest return month since March 2016. So nearly 3 years. This March has been the best, and that's been driven by flows coming in from foreign investors. 40,000 odd crores came in from foreign investors in the month of March into the stock exchange, and that led to the benchmarks at least rising by 7.8% for Sensex and 7.7% for the Nifty there. In the portfolio managers space, the top 50 portfolio managers which we track, accounting for nearly over 70% of the assets. Those portfolio managers on an average have given a return of 6.5%, as you mentioned, and that's also one of the highest return in the last 15 months since the time we have been tracking portfolio managers. So it's been a very good month for portfolio managers on a whole, because they have been able to give a better return there. If you look at some of the individuals or number of portfolio managers who have outperformed the benchmarks, now that's something which we're looking at, because Sensex and Nifty give 7.7%. So roughly around 14 of 50 have outperformed. 14 out of 50 have outperformed the benchmark indices. So it's not across the board which is there. It's only the top 10-15 which have been able to do better than benchmarks, and many of them, the highest returns was given was 11.61% on a monthly basis by Club Millionaire Financials. That was the highest, followed by Kotak also getting 11% there. So you had other names like Care, IIFL Wealth, SDFC Asset, Old Bridge, Stage 1, Invesco and Equity Intelligence, which is Porinjus, coming with a return of 8.7% in the month of March. So it's not a broad-based thing. Yeah, in the 50 which we were tracking, 48 had positive returns, and 2 portfolio managers had negative returns in the month of March. That also shows that Reliance Wealth being one of the portfolio managers which had a negative.
That must be difficult
times for them.
I'm just saying difficult to underperform at a time when the market by and large bounce back.
Exactly. It's very tough to do it. Not to make returns in this market if the market itself has gone by, which shows the kind of portfolio they've been sitting on or the bets they have taken, and that's why it's not playing out the way it is there. One of the interesting trends that came in was the foreign flows. As I said, we saw for nearly 40,000 odd crores of foreign fund flows, net flows coming into the market in the month of March, and we saw nearly $600 million flowing into the portfolio managers for them to be managed. You saw ASK getting a bulk of it, nearly 400 odd million coming to ASK investment managers, Inam, Quantum, Karma and White Oak. There are some of the 5, these 5 have got nearly $660 million of flows coming into them. So yes, there is some money coming in, but I think there is also the issue of where to invest. And so the money is also trying to diversify its way of whether going to directly to equity or through portfolio managers and coming into the market.
Okay, that's very, very interesting, Sajid, to see a story about portfolio managers doing better than what they have in the recent past. Maybe March aided that as well, but it's been tough times, and now it's good to see some of these do well. The story around this is there on the website too. Do log on and do read what some of the marquee names that you keep on seeing, not just on Bloomberg Quint, but other forms of media as well. Try and see how they did in the month gone by. Sajid, thanks so much for putting that.
You have all the details, micro details.
Micro details as well. Okay. So for more details, micro details, log on to bloombergquint.com. It's early days in the new financial year, and Yash Upadhyay has put together what analysts are betting on this year. He's standing by with a list of the top buys and sells on the Bloomberg terminal and Y. And Yash, good morning. What is the filter that we have applied here?
So Neeraj, what we've done is that we've gone back and put a filter of stocks that are at least covered by 5 or more analysts, and we arrive at a universe of 432 stocks which are actively tracked. Of these, the stocks that have seen an increase in terms of the number of buy ratings over the last 1 year, surprisingly, it's not the consumer staple names, but it is the IT pack that dominates this list. But before we start there, the highest upgrade, or almost the number of buy ratings doubling over the previous year, has been seen in ACC. So there the number of buy ratings have gone up from 17 to 30, which is an increase of 13 buy ratings, and this is mainly on account of the positive management commentary coming in, where they expect a 7 to 8% volume growth in calendar year 19, led by growth coming in from the affordable housing segment. It is also the beneficiary of better pricing as well as new product launches in the premium segment. Moving on, Tech Mahindra has seen a significant increase in buy ratings from 29 to 41 now. This is mainly on account of the large deal wins that the company has managed in the previous quarter, as well as the 5G revolution and the strong and consistent growth in its legacy business, which is the enterprise business, which is prompting analysts to have a buy rating. Moving on, for Axis Bank, with a new CEO in the form of Amitabh Chaudhary and a more than capable management, the brokerages believe that there is the credit to cost outlook remains very positive for the company, and expect the earnings to accelerate going forward. SBI Life Insurance, there the number of buy ratings have again increased from 13 to 23, which is an increase of 10. Here the life insurance is the largest, has the largest bank assurance network. It also has a low risk business with the lowest expense ratio amongst the 9 key life insurance players. A strong underwriting business, which also means that their profitability is seen improving going forward. And lastly, when it comes to TCS, it is the largest IT player, and it is likely to see industry beating growth going forward as well, with a sustained growth in its key verticals like the BFSI as well as the retail space, and double-digit growth seen on account of the on account of the large deal wins that are seen, as well as the traction in America as well as Europe. Moving on, in terms of the key downgrades, here again the auto pack stands out for me, but Lupin from the pharma space has seen a doubling of the sell ratings from 10 last year to 20 analysts now having a sell rating on the counter, and this is mainly on account of the regulatory hurdle that the company faces in terms of warning letter for some of its key formulation facility like the Goa as well as Indore facility, along with an OIA which was recently issued for its Mandideep plant, which is a key negative in terms of earnings growth going forward. Eicher Motors, again, it has seen an increase in number of sell ratings from 9 to 15, and this is mainly on account of the hyper growth that was seen in earnings. Analysts believe that there would be some amount of earnings moderation going forward, as well as the stiff competition from Java and the price increases on account of the regulatory changes, be it the insurance or the compulsory ABS. That is likely to hurt volumes in the near term. Moving forward, for Bank of Baroda, in fact, the number of sell ratings have more than doubled here, from 3 to 8, and this is on account of the merger with Dena as well as Vijaya Bank, which poses near-term challenges according to a report from Motilal Oswal. And the second last is CEAT, where the number of sell ratings have in fact gone from 0 to 5. So we had none of the analysts having a sell rating on CEAT last year, and now we have 5, and this is mainly on account of the volume slowdown across OEMs as well as the higher input cost, which is likely to put pressure on margins, and the higher capex that the company has undertaken, which is likely to put pressure on the EPS. And lastly, we have the big boy Maruti Suzuki, wherein the number of sell ratings have gone from 2 to 7 as of now, and this is mainly again on account of the increased competition as well as the price hikes because of the regulatory changes. Also the fact that the input costs too have gone up, which limits the scope of margin expansion, and the heavy discounting which is seen putting pressure on their margins, as well as the expensive valuations, which means that most of the analysts prefer to stay away from it.
Thanks, Yash. I've usually seen a number of times that the least favored ones tend to give good returns if indeed the companies are quality. So do monitor these lists very, very closely. Thanks for putting that into perspective. As we wrap up First Word, let's talk about what the IMF has done. The International Monetary Fund has downgraded the global growth outlook for the third time in 6 months. It expects the global economy to grow at 3.3%, the slowest since the global financial crisis. But despite cutting India's growth forecast, IMF chief economist Geeta Gopinath maintains that the country will continue to grow at over 7%, irrespective of the outcome of the upcoming elections. Listen into a slice of the conversation she had with Bloomberg's Tom Keene.
We've certainly had more accommodative monetary policy by the US Federal Reserve.
Yes.
You know, the European Central Bank. We've also seen large amounts of monetary and fiscal stimulus from China. So those policy interventions could help growth. And as long as things stay stable, we expect some of the stressed economies to recover towards the end of this year.
Some of the stress, John Farrell, my colleague, pointing out the huge swing in German economic outlook, just as one example. Part of this is moving from multilateral to bilateral to what I call Trump lateral trade. What does your World Economic Outlook and your Financial Stability Report, your Fiscal Monitor, what do they say about the unique trade policy of the President of the United States?
The trade tensions that came up in 2018 between the U.S. and China is an important factor that weighed negatively on growth towards the end of 2018. Now, we are certainly seeing some improvement there, but we continue to be concerned that trade tensions might spill over to other sectors and other countries. For instance, if it were to hit the auto sector, that would bring in many more countries and affect a bigger chunk of the global supply chain. So that's something we flag as a very important risk, and you know, that our forecast assumes that that would not happen. Now, if that were to happen, that would again be a negative knock on growth.
Geeta, your report speaks of good news of stability in China, stability in India, and even growth. You have unique perspective, particularly on Indian economics. Coming out of the election, can India actually advance emerging market GDP? Can India really get ahead of steam going and pick up 100 or even 150 basis points of economic growth?
I mean, India is, you know, is the largest, the fastest growing large economies in the world, growing at over 7%. And our projection is for growth to be about over 7% both for 2019 and 2020. Now, we've seen a revival of investment in India. We're seeing consumption being strong. And the fact that oil prices came down towards the end of 2018 is helping India. Now, going forward, of course, we'll have the elections soon, but what we've experienced with India is that economic policies tend to be rather insensitive to who is in power. So they tend to be, the reforms tend to go on, and which is why we are optimistic about the future outlook.
Well, that's all that we have on First Word today. Lots more lined up on Indian Open, though. We discuss all about elections and the impact on markets with Mahesh Nandurkar of CLSA. This is a very important conversation. We speak to Shekhar Bajaj of Bajaj Electricals about the company's retail program, reach, growth outlook, and more. But after this break, a full tilt towards the day's trade.
What is the meaning of this word suspense? Suspense is something very intangible. Say we show somebody getting killed. For me, I'm not interested in a whodunit. The moment the audience knows that this person has done it, and he has to ensure that he doesn't get caught, there is a certain tension in that. I try to give away as much as possible to the audience and still keep enough aces up your sleeve. I don't think any director would be able to say, okay, this is my style. I don't think I can define it.
Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments. good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
They're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Welcome back. You're watching Indian Open right here on Bloomberg Quint Live. Good morning, Neeraj.
Morning, Devina. Well, it's up one day, down the next. Quite difficult to predict what will happen, but maybe don't get into the business of predicting. Just take it a day at a time. Though today seems to be a day which could be marginally in the red.
Interestingly, the survey, the 21 global investors survey that Bloomberg had conducted suggests that the prices or the excitement around the Modi government coming back is probably already built in to these prices. And if there is a disappointment of any kind, that could actually mean receding for the equity markets. And aside from that, it's not just the government coming back into power. It's about the agenda that they have with regards to the growth of the economy and what they do in terms of a job push. That's probably going to take some more amount of the spotlight.
Yeah, so the low-lying fruit out of the way. Now try and look at what could happen over the medium term.
Yeah, in terms of yesterday's session, at least, barring telecom, which was a big drag in the sectoral indices, everything else did well. Let's bring in Agam Vakil right now to talk a little bit more about how the derivative space shaped up in yesterday's session and what we're looking up for in terms of a setup. Agam, good morning.
Sure, good morning. Well, we did see the Nifty advance in the last 1 hour of trade, and that followed about a 1% increase in open interest too. So there were longs building in as far as the Nifty futures are concerned, coming down to the Nifty banking futures, where we've seen a very little change in open interest. The interesting part perhaps is the India VIX, which continues to remain above the mark of 20, which is considered as a relatively dangerous zone to be in as far as volatility is concerned. But coming down to your open interest change, largely looking at writing around the 11,500 and 600 puts. And we'll be keeping an eye on that one, considering the Nifty currently hangs around 11,650 odd levels. This is your open interest distribution. Nothing has changed on the upper end of things around the 12,000 mark, but on the lower end, we are keeping an eye on 11,500, which will provide some sort of support given the put OI. But put call ratio edging higher to around 1.5 on expected lines. And moving on to your stocks, Adani Power, DLF and IDBI Bank in the F&O ban, along with Jet Airways and PC Jeweler, and Reliance Power and Wockhardt. So a long list of stocks out there which are well buzzing. Diwan Housing Finance looking at fresh longs given a 11% increase in open interest, followed by a lot of traction in Tata Motors too. And in fact, the entire auto pack was quite active yesterday. Moving on, we also have CEAT, which actually saw shorts building into the system, and we also have a lot of activity in Ashok Leyland, which actually saw some short covering. So mixed cues coming in, but largely towards the gains as far as the auto sector is concerned, and we continue to keep an eye on some of these names as we move into trade today.
Right, Agam, thanks very much for that. Interestingly, yesterday's session, autos were the top sectoral gainers amongst the rest, and Maruti, 9 straight days of gains coming in for that counter, so not looking all that bad, back above 7,200. Abhimanyu Sofat, Vice President for Research at IIFL, is joining us on the show right now. Abhimanyu, thanks very much for taking out the time, and I want to stick to autos now. Written off just a few weeks back, considering the volumes did not pick up and there were a lot of issues with regards to pushback of the festive season, interest rates being high, and that's why a decision making being postponed in terms of buying new cars. But it doesn't look like the prices of the stocks now seem to be coherent with what the sentiment is.
So I think so, if you look at the overall sector, clearly, I think so the challenges in terms of volume growth will continue to remain at least for a couple of months going forward. We clearly see that there's some amount of weakness which is happening in the overall demand. In terms of, Maruti, what we feel is that, the price, from a price perspective, the stock looks reasonable. If one is able to get the stock even at a slightly lower price because volume continue to decline, then I think so it could be quite an attractive stock to own from a long-term perspective in terms of the portfolio. Our target price for Maruti is currently close to around 7,700. So I think so, we are waiting for the right price, and at that price we will look at the stock. Structurally, if you see the sector overall, I think so the ancillary side, we find that there are more opportunities to look at. Specifically, I think so batteries is one segment where, we see that the replacement market will be quite decent, and the growth would be quite decent relative to the OE segment. So something like an Amaraja or even an Exide, those could be interesting plays to look at from the auto sector perspective.
Interesting. Abhimanyu, we spoke about the ancillary space at length earlier on in the day, about how there might be a couple of factors, including exports, which might aid the ancillaries. And tires seem to also stand out slightly differently compared to the rest of the pack. What are your thoughts here? One, on which companies would cushion the stress due to export opportunities, and what's the view on the tire companies?
So first of all, coming to the tire companies, yes, we have seen that the crude prices again started to go up. But if you monitor the pricing closely, I think so SBR prices have not gone up relatively that much, considering how much crude has gone up. So that is a clear positive for the tire industry. Even the natural rubber price continue to be quite benign for the industry. So, for sure, there will be an issue in terms of top line growth because of OE segment. We've seen a significant amount of inventory level at the OE level. And for that reason, we could see some amount of top line related issues. But on the margin side, I think so, things will not be as bad as what people are expecting. Whatever high cost inventory was there earlier, I think so in this particular quarter, one would have seen some amount of pressure easing because of that. So clearly from a valuation perspective also, the sector looks quite decent to us. So something like an Apollo Tires, which is not only dependent on the Indian market, but we know that in Hungary, as we see the capacity ramp up, profitability should improve from international operations as well. So that looks quite decent to us. Coming to the export side, see, it has to be a very specific, stock-specific kind of a thought process. In case of Bharat Forge, clearly the way we have seen that the US commercial vehicle sales numbers have come down, especially the truck sales number, that could have a impact on Bharat Forge. And from that perspective, right now we would be negative on the stock, because we feel that the domestic market will not be able to insulate Bharat Forge much, considering the challenges that they are facing both domestically as well as internationally. Other companies like Motherson Sumi, we believe that valuations have become quite decent relative to their historic multiples. So at every weakness, one can look at buying stocks like Motherson Sumi, because 15 multiple is quite a decent entry point for stocks like Motherson Sumi for an investor.
All right, Abhimanyu, I want to talk to you about the Vodafone Idea rights issue opens today, but I'll come to you and get your opinion in just a bit. Our research team is ready with us, so we want to quickly go across to see what are the big stocks that we're going to watch out for that are in the news this morning, as well as some brokerage calls that have come in. Samit, Yatin, both of them are here with us. I'm going to come to Yatin first with some stocks and news.
Well, a couple of stocks to talk about, and first let's start with Bloomberg Quint exclusive. We gather from reliable sources that today there will be a large block deal in HDFC Bank, which would be worth nearly 2,500 crores. Basically, this is undisclosed seller which wants to dispose nearly 1.1 crore shares via the block deal route. This will be close to 0.42% of total equity of HDFC Bank. The indicative price range does indicate a discount of nearly 3% to yesterday's closing price, and Deutsche Bank is said to be the sole broker as far as the entire transaction is concerned, so we'll watch out for HDFC Bank in trade today. Also, we have SBI, which has reduced the MCLR rates and home loan rates effective today. So basically, there is a marginal cut of 5 basis points for the MCLR and a 10 basis points cut for the loan, housing loan up to 30 lakh rupees. Jet Airways, and what we are gathering from the PTR report is that the domestic pilot body has served a legal notice to the airline for setting April 14th deadline to clear the salary dues. All of us know that there is issue with Jet Airways, which is cash strapped, and probably now the employees are also facing the heat in terms of salary dues, which are not yet been cleared by the company. M&M, that auto company would be in focus. We have a Reuters report which said that M&M and Ford joint venture in India will be announced very, very shortly. Now, the report said that Ford will own close to 49% in the joint venture, and the remaining will be owned by M&M, which is the balance 51%. And this move could lead to Ford shutting down its entire India operations and now consolidating everything under the umbrella of the joint venture between Ford as well as M&M. Of course, the deal structure is not known, but a quarter or so is the timeline that the Reuters report is indicating. And finally, there is a Times of India report today on Wipro, which said that the IT major is all set to announce a buyback worth over 10,000 crores at a price of 320 rupees per share, which means that the buyback could be announced at a premium of nearly 17% to yesterday's closing price.
Indeed, and a big buyback at that. Thanks a lot for that, Yatin. Somit, some brokerage calls?
Well, a couple of them. The first one is on Aditya Birla Fashion, where Motilal Oswal has initiated coverage with a buy rating and a target price of 260. Now, according to the brokerage, Aditya Birla's healthy portfolio mix would help the company sustain growth going forward. Now, along with this, the revamped strategy for Pantaloons is also set to drive its earnings in future. And on the back of these two factors, the brokerage is expecting the company's overall revenue and EBITDA to grow at a CAGR of nearly 14% and 23% over FY19 to FY21. Lastly, it says that despite the sharp rally in the share prices of Aditya Birla that we had seen in the last 6 months, the share prices have still not fully captured in the secular growth potential for Aditya Birla Fashion, the healthy improvement that the company is expecting on its return ratios and the cash flow. So still more upside that Motilal Oswal is seeing for Aditya Birla Fashion. The second we have is on Century Plywoods, where CLSA has downgraded the stock to sell from buy and has also cut the target price to 174 from 195. Now for the MDF segment, the brokerage says that the low industry utilization would delay realization and margin recovery. Now it says that in the MDF market is continuing to see a supply glut due to a high capacity that has come online, and because of which the utilizations are expected to remain low. Now for the plywood segment, the margins are likely to remain under pressure due to subdued GST driven market share gains, product mix towards non-premium products and pricing pressure. Lastly, it says that the valuations of the company are reasonable, but due to lack of earnings trigger going forward, it is expecting the stock performance to remain muted.
Right, guys, thanks very much for that. So lots of those stocks that you need to keep an eye out on. Abhimanyu, I want to come back to Vodafone Idea and the rights issue that opens today, and whether or not it should be something that investors should look at, and whether or not post this issue, things will start to normalize for Vodafone Idea and you will actually see a better return profile for investors.
So if you look at, the sector per se, I think so for next couple of quarters, the challenges will continue for most of the players because of, the pricing of Jio continues at the current level. We have not seen any increase in pricing happening by Jio. Overall, if you look at the debt equity of, whether Bharti or Vodafone, that continues to be quite high. So right now, we are not focusing too much on the issue per se, but structurally, we would say that, from an investor perspective, Bharti would be able to better, fight on Jio over the next couple of years in terms of, ensuring that they will be able to fortify their market share. And from that perspective, currently we would prefer a Bharti Airtel relative to a Vodafone.
Okay. Well, Abhimanyu, so much more to talk about. We want to talk about some active trend-making stocks as well. Let's stay on though, because it's about time that we get in our technical experts on board as well and just get a quick perspective on what could happen to trade. Gaurav Bissa of LKP Securities with his thoughts on charts and derivatives, as also Chandan Taparia of Motilal Oswal, who will also shed light on both these aspects. Gentlemen, both of you, very good morning. Great having you as always. Gaurav, let's start off with you. How are you approaching trade this morning? We are likely to start off a 0.25 percentage point lower.
Good morning. If you look at the data for last couple of trading sessions, as we have seen some resistance coming at levels of 11,750 odd levels. However, if you look at the put options, 11,500 put option on the weekly side and as well as the monthly side is witnessing some amount of selling even at these levels. And that again shows the confidence when Nifty fell towards the level of 11,560, 570. Even at that time, we were seeing some writing happening in 11,500 put option. So in all likelihood, there's a chance that even a dip towards 11,500 can be used as a good buying opportunity. This is what we have been advising to our clients as well. Nifty gave a general breakout above levels of 11,500, 520. It retested those levels and again bounced back. So one, as far as derivatives are concerned, good amount of writing is happening in OTM put options, a positive sign. Second, on technical part, a bounce back after retracing the breakout levels that again shows strength in the index. So in my opinion, index is heading towards 11,800, 850 in next few trading sessions. To have a better risk reward, I would wait for a dip towards 11,600, 610 on the spot side. Keep a stop loss of 11,550. Immediate target price of 11,720. And after that, 11,800 to 850 would be insights.
Chandan, Taparia, what about your call on the indices?
Yeah, good morning. Looking at the market movement, Nifty has got stuck in between 11,550 to 11,760 zone from last 8 trading session. Whenever it comes near to 11,550 zone, that is used to be earlier resistance, now started to act as a support zone. So a classical example of resistance turning as a support. And at the same time, we are witnessing put writing at 11,600 in the weekly contract, which also indicates that market wants to hold 11,550, 580 zone. But at the same time, call writing is intact 11,700. And the lifetime high is also the 11,760, 761. So entire data setup and technical also indicates the trading range is likely to be between 11,500 to 11,760 zone. So if any declines happens in the market, will continue to be with buy on decline strategy by putting support near to 11,550 for an up move towards 11,760 zone.
Okay, so in light of that, the question mark would be, what are the stocks that our experts are betting on as well? Chandan, of course, as an all-buy list, goes in line with his theory of buying the Nifty on declines. And Chandan, you're betting on large caps, the two biggest heavyweight sectors, banking and IT.
True, and what I believe that now if Nifty has to move, then these selective stocks in large cap has to participate, whether you talk about ICICI Bank, Reliance, selective IT counter or ITC. And we believe that these stocks will support now Nifty to surpass 11,760 and then head towards the new high territory. So looking at that, selected to go long on ICICI Bank. After the decline of last 5-6 trading sessions, the stock has exactly taken support near to 385 zone, which earlier used to be a hurdle. So similar kind of formation which we have noticed in the Nifty, that previous resistance are acting as a support zone. So overall trend of the counter is positive, and yesterday it formed a bullish pattern and also given a breakout from its falling supply trend line on lower degree time frame. So recommending to go long on ICICI Bank with a stop loss of 385 and expecting it to head towards new high territory of 415. Second tier, that is buy on HCL Tech. Now most of the IT counter are in budge. We have seen strong momentum in last couple of trading sessions. Nifty IT is also witnessing some buying interest, and we have result from IT heavyweights like TCS and Infosys. But the positive sentiment in a couple of counter indicates that momentum could aid going forward. So recommending to go long on HCL Tech. Just a couple of days back, it gave the breakout, retested the support, again started to attack the fresh buying interest. So recommending to go long in HCL Tech with a stop loss of 1,085 and expecting it to move to us 1170 to 1180 zone.
And HCL Tech has been one in the IT pack that has really scaled new highs over the last few trading sessions, particularly the last 1 month, 10% higher. And all this is happening while the currency is actually strengthening and not depreciating. So the entire IT pocket seems to be doing, having a trip of its own, aside of what the currency has been doing. But Gaurav, Bissa, what about your stocks?
The first recommendation today would be a buy call on Reliance. This is the first time in many days that they have given a buy call on Reliance. We have seen that people are bullish, but it's not performing up to the mark. It has now retested the breakout levels of 1320, 1325 and seen a positive uptick coming in. Not very aggressive long positions. However, if you look at last 1 month performance in terms of open interest addition, we did see good amount of additions happening. Rollovers are also quite decent. So similar to the line of Nifty, where it retested the breakout levels and witnessed a bounce back. Same pattern is observed in Reliance Industries. It can now head back towards a level of even 1500. That would be a position target. However, for next a day or two, One can keep a stop loss of 1310, 1315, play for target price of 1370. Second recommendation would be a buy on sale. I have recommended this particular stock a few days back. It did touch the targets of 60.5, 61. It has again retested the breakout levels of 57 and bounced back from those levels. A lot of long positions seen getting built. 60 call options still commanding good OI concentration. One can keep a stop loss of 57, play for target price of 61. And Tata Communication is looking a little bit vulnerable. Given a breakdown on average charts, if the current levels are not sustained, we can expect a 3-4% fall coming in a matter of a day or two. With a stop loss of 590, one can play for immediate target price of 570.
Okay. One stock that has made big moves over the last 2 days post the announcement of the share swap deal of Indiabulls Housing Finance and Lakshmi Vilas Bank is Indiabulls Real Estate. That stock in yesterday's session was one of the bigger gainers on the broader market. In the last 7 days, the stock's propped up about 14%. So 2 days in a row, good gains coming in for Indiabulls Real Estate. Abhimanyu, quick comments on what you made out of this deal and what this implies for real estate if now the Indiabulls group is sort of trying to isolate themselves from the real estate business.
So I think so the things are still quite fluid to understand what ultimately will happen. I think so RBI still has not given approval to this particular deal. So I think so one should wait for what the RBI final directive on this particular deal is before getting into that what happens with the overall structure of the deal, or what happens to the other businesses of Indiabulls. Real estate per se, their business is pretty well. They're doing quite well relative to other peers in the sector, whether it is on the office space side. They also had plans at some point of time to get into REITs. So I think so let's wait for some time. In terms of this particular deal, it is more like Lakshmi Vilas Bank was reeling under a lot of pressure, and for Indiabulls it kind of became a good opportunity for them to get into the banking space. But until unless something comes concrete from the RBI, right now it's very difficult for us to give a recommendation on the same.
Okay, point well taken. Maybe the real estate deal could be in consequence to this merger getting approved as well. So until that happens, it might be difficult to really take a call on what will happen. But must say the market took a call yesterday. Indiabulls Real Estate was very, very active in trade. What was also very active was First Source Solutions. The news reports came out that Rakesh Jhunjhunwala has increased his stake in First Source. That led to the stock doing well. Abhimanyu, if you have a view on First Source, then that. But otherwise, this mid-cap IT pack wherein deals are happening at reasonably higher multiples as well. Any thoughts on either First Source, which is of course not a part of a deal, but nevertheless, or a Mindtree or NIT Technologies or NIT for that matter, which gets a bucket of cash in return for the deal?
So I think so, if you look at how the entire industry is moving, deal making is something in the IT industry, I think so that will continue to be quite robust over the next couple of years going forward. I think so the reason for that is, say, take for example something like a bearing. Earlier they had an emphasis, then they got into Hexaware and now into NIT. So for them it is more like a benchmarking, relative to what the other players in the industry do. These guys get into these businesses for a year or two, try to change the basic operations of the company, and then over 6-7 years look at exiting the particular company. From that perspective, I think so overall the deal making in this sector might increase. With regard to specific companies, I think so Mindtree in terms of business will continue to do pretty well. They would be at the upper end in terms of growth over next couple of quarters. With regard to NIT Limited, clearly I think so the risk reward is quite favorable. I think so 135 is a decent price for NIT Limited based on their stake, and if they are able to properly leverage their education business. So that business also which was going through a bad time, we have seen slowly that they are continue to do quite well on that. At some point of time, there could be a deal even in NIT Limited also over the next couple of years. Who knows on that? So I think so. Investors should obviously look at having exposure on this mid-cap IT side, because from a valuation perspective, they are not, they are not at 20-25 multiple. They are all at, between 10 to 15x multiple. And from that perspective, I think so. In terms of preference, we would go among the larger ones. Something like Mindtree, because we feel that the near-term numbers of the company also will be quite decent.
All right. Lots to talk about, and we've got just 30 seconds left to go for pre-open. It's not probably going to be a great start, at least as per indications from Asia and SGX Nifty. Asia as a pack is trading weak. Nikkei 225, that's down about 0.6%, and China and Hong Kong too trading under. SGX Nifty is down 1/3% right now, so at 11,715, that's down 35 points. A few more seconds and we watch out for what the Indian market pre-open looks like, and that's got up on your screens. Nifty 50 marginally under, Sensex trades flat right now. Individual stocks, we come back to the index once the price is stabilized, but individual stocks on the Nifty and how the move has been. Z is stacking up as one of your top losers at 401 right now. Z is trading under by 2%. JSW Steel, that's down 2.5%. Reliance Industries fluctuating, very volatile. So you're going to see a few spurts in terms of a few stocks making big moves. But Axis Bank now is showing you a 4.5% cut. SBI down 1.5%. Aishu Motors, Sun Pharma, Grasim, almost 1% for each of these. L&T, Tech Mahindra, Adani Ports, about 0.75% under for some of these other names. In terms of gains, Asian Paints gained some ground, 1475 yesterday. Remember, the CLSA downgrade that came about caused a little bit of a pressure on the stock in intraday trade. It was the worst performer on the index by close, but it looks like today there's some bit of a pullback in pre-open at least. M&M is up 1%, Titan is up 1%. Yes Bank, yesterday's session closed positive by about 2% in light of what the entire banking pocket did, and now at 272. That's a smart move on Yes Bank. In the pre-open though, just about 0.5%. The currency has strengthened a bit, so from 69.29, which was yesterday's close, the rupee is trading at 69.22, so just about a 7 paise bump up for the currency. And for the bond market yields, we're at about 7.37. Yesterday's open was somewhere closer to 7.40, so there has been some softening.
HDFC Bank, just focus on that a bit. Block deal expected today at a slight discount. Let's see if that continues to reel under temporary pressure. Okay, let me rephrase, not temporary pressure. It may stay under pressure, but the start could be marginally off. Let's wait and watch. Century Plyboard is the other one. CLSA has come out of the note. They've cut the target price. Let's see if that stock will react today or no. Remember, Asian Paints corrected about 3% on a target price cut. Lastly, Indiabulls Real Estate, one stock, and First Source is the other one that I want to mark. What's happening there after the big move yesterday? Indiabulls Real Estate could continue. First Source is the other one, 5% higher yesterday. Let's see if it continues. For now, it looks like that stock too could have a day in the green. Let's wait and watch what happens there. HT Media bounced back a little bit. Praj Industries has some news bits to it about some tie-up that it has done. So 3 or 4 names that could be interesting to monitor in the session today. The stock of the day yesterday, though, arguably in terms of news flow and volatility, was Sterlite Technologies. Went down all the way to 192, 193, bounced back to those 207 odd levels, but under some serious pressure the last few sessions. What with the pledge issue as well as the optic fiber cable prices likely having come off. Abhimanyu, do you guys have coverage on this one? And what do you make of what's happening with this stock? Was a favorite until 6 months ago. Each of the last 6 months, it's given a negative tick. It's lost some serious market cap in the last 6 months.
Unfortunately, we don't cover this particular stock.
Okay, so maybe we can't get a fundamental view out here, but look at that 6-month performance for Sterlite Tech. On a monthly basis, it's given a negative tick on each of the last 6 months, 32% gone already. What are the levels on the downside, Gaurav, Bissa, that you envisage for this one? Sterlite Technologies, Gaurav. Okay, I don't think Gaurav can hear us. Chandan, maybe you can hear me. Any views on Sterlite Tech?
Yes, talking about Tech, the stock is continuously falling down, or in fact on the last trading session it fell down sharply, and there was significant jump in the volume as well. I think some block deal happened as this volume shows near to 1 crore. But trend is negative, it is continuously making lower top, lower bottom formation. And if it has to reverse, then only it has to hold about 220, then only we may get a sign that the stock is going into deep oversold territory or some bounce could be there. So till it remains below 220 zone, we will continue to be on bearish side or even looking to retest 190 or 188 zone.
Or the one big uncertainty, not the only uncertainty out here, aside of the pledge issue, remains that the management confidence that their realizations from optic fiber prices will not go down. But if China, the world's largest customer, is showing pricing pressure, how is it that the other players can remain insulated? I think that's the only question that you got to...
And I think that was the reason why when this surfaced with regards to China, that was the first one of those days where you saw that big crackdown on Sterlite Tech in terms of their pricing as well. So from a business standpoint also, a lot of many questions being raised.
Yeah, I mean, the management sounded confident when they spoke to us, and it'll be important to see what happens in Q4 results as well, whether there is evidence of pricing pressure and margin pressure coming in. But to a normal mind, it seems unlikely that when China prices go down that everybody remains insulated, but the management was fairly confident that reiterated their 700 crores profit guidance for FY20 as well. If indeed pricing is getting disrupted, that then can't happen. But they were very confident. So let's wait and watch. If they deliver the numbers, then the street would want to probably revisit the bearish stance right now.
To see the proof in the pudding. So let's see.
Completely agree.
Let's wait and watch for that. But Abhimanyu, two stocks not cheap, but have made new highs. And I think investor favorites at this current point from the consumption space of sorts. Bata, Pidilite, two stocks. 52-week highs, record highs, I think, for Bata. The year has been fabulous. Management has been very confident, even with regards to their overall strategy and how they want to take forward premiumization and to have different segments cater to different, classes of people. You've got to give it to the stock. It's up about 82% for the last 12 months.
Sure. So I think so that particular segment continues to do quite well, and I think so we've also seen some amount of benefit that they will also have for the cut in the GST price for footwear less than 1,000 rupees. In terms of growth, I think so clearly the opportunity is there, not only on the volume side but even on the realization side. Premiumization as a story, is doing pretty well for them. With regard to multiples, it might look a bit high right now, but I think so growth will be quite decent over the next 3 to 4 years, and will be quite consistent. So market will obviously reward such companies. Even in case of Pidilite, I think so clearly, going forward, as we see some amount of improvement happening on the real estate side, we could see slight bump up in volume for Pidilite going forward. Obviously, on return parameters, the company does exceedingly well. So we are quite bullish on that company as well. So yes, both these stocks look quite decent to hold on to in the portfolio if you already are invested in them.
Would you be a trader though, Chandan, Taparia, on any of these names? While obviously, if you have it in your portfolio, according to Abhimanyu, you should keep it there. But from a short-term point of view.
Yeah, I think stock inspection will be there in the market. We have seen the sector and the stock rotation. I think one can continue to be with such names.
All right, got that. Indiabulls Real Estate, I mean, we spoke to Abhimanyu about it, but after the last 2 days, the moves that we've seen of about 16% odd, would you be a buyer, Chandan?
However, we don't have coverage, but stock has seen the strong consolidation breakout. We have seen surge of more than 11-12%. And in fact, the volume is significant, more than 8-10 times than the regular trading volume. We have also noted the jump in the delivery volume, which indicates some buying action and interest is clearly visible in the counter. However, there are buzz regarding their fundamental changes, but I think the price pattern suggests till it remains above 102 levels, the stock has potential to move towards 150, 170. However, we don't have coverage, but price pattern and the momentum looks quite promising for heading to higher targets.
Okay. Gaurav, Bissa, Wipro likely to start off as the top gainer on the Nifty 50. There is news bits to it as well. Something that I think we spoke about a few days back, but Times of India is reporting about how there could be a corporate development, 278 and counting. Is there more upside in Wipro? Would you trade it this morning?
There are two different questions. As far as upside is concerned, it can go towards 285, 290, irrespective of whether the corporation happens or not. The momentum is quite strong. The positions are quite interesting. So it can go towards 285, 290. As far as the risk reward is concerned, at these levels, risk reward is not that interesting. You buy on dips towards 270, keep a stop loss of 265, and you play for 280 plus kind of levels. At 278, 280, the risk reward is not that favorable. You are playing just 1:1 risk reward. I think that might not be the best trade for today.
Please keep that in mind. Gaurav Bissa believes that it may not be the best play for the day. The risk reward is not in your favor. Just minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. First up, Vodafone Idea's rights issue opens today. The telecom player is looking to raise 25,000 crore rupees at 12.5 rupees per share. Nearly 75% of the funds raised will be used to reduce debt, said the management in a chat with us yesterday.
Wipro is readying a mega buyback plan, according to a Times of India report. The IT major may buy back shares worth 10,000 crores at 320 rupees per share, which is a good 17% premium to yesterday's closing price.
Watch out for HDFC Bank as 0.4% stake may change hands in a block deal today. This is a BQ exclusive. An undisclosed entity may sell the stake, which is worth 2,500 crores. That is if the shares are sold in the range of 2,219 to 2,287 rupees per share.
Moving from one bank to another, SBI has reduced its MCLR by 5 basis points across various tenures. And the bank has also cut rates on home loans by 10 basis points. But that's only for loans up to 30 lakh rupees. The rates come into effect today.
A new joint venture is in the works in the automotive space. Mahindra & Mahindra and Ford Motors may join hands soon. Perhaps Ford Motors is thinking of ceasing its independent operations in India. As far as the ownership in the JV is concerned, M&M will hold 51%, while Ford likely to get the remaining 40%.
Lastly, CLSA downgrades Century Plyboard to sell, cuts its target to 174 rupees per share. The brokerage says margins in the plywood segment could remain under pressure.
Abhimanyu, Sofat, before we thank you, if you were to place a bet on a particular space or even a large cap Nifty name currently, what would that be and why?
So I would say L&T looks quite decent to us, considering that the order book is swelling, somewhere close to 2.9 lakh crore. Going forward, we clearly see that the investment theme will do relatively better to the consumption theme. They have the best pedigree in this, in the overall, whatever we see in the sector. In terms of multiple, it is available at a decent multiple of close to around 17x. So that would be one stock that we really would like to own from a large cap perspective. In addition to, the normal BFSI names of Axis, SBI as well as ICICI. If I go more on the mid-cap side, an interesting stock that recently we've become more bullish on is Navin Fluorine, because their key raw material prices in March have come down by at least 20%, and with the currency relatively appreciating to the level it was earlier, we do see going forward margin expansion to be there, and with a new plant coming up at Devas, we do feel that volumes also next 1 year should improve going forward for them. So these are some of the stocks that we currently are quite bullish on.
All right. We leave it at that. Abhimanyu, thanks so very much for joining us this morning with your thoughts and views. We still have our technical experts with us, so I want to just quickly go across to them and talk a little bit more about the volatility that we're seeing within the sugar pocket. I mean, one stock that we're going to watch out for early morning trade is also going to be Praj Industries for a deal there. But on the charts, the sugar pack as a whole, and also Praj Industries, which in pre-open is already showing you an uptick of about 4%. Gaurav, Bissa?
Now the trend is up. The good thing is that it has given a breakout of after 10-year consolidation. So the targets would be much higher. It would be in a multi-week, multi-month uptrend. For somebody who wants to play for 2-3 days, it's going to be quite volatile. But if somebody can hold on for 3 or 4 months, maybe 6 months, then yes, at these prices, one can go long. It can move towards much higher levels from the current levels.
Okay, we'll watch out for Praj Industries in the session today. The stock has had a reasonably good run, and despite the sugar stocks coming off, the pure ethanol story doesn't get disrupted, and maybe that's why Praj Industries is doing okay. But if you had to nail it down to one top stock for the session today, what would that be? Chandan, Taparia, to you first, your top call for the day today.
Yeah, I'll be with ICICI Bank, expecting fresh leg of rally, and if market and Bank Nifty has to move, this stock will command high. After the decline of last 5 days, the stock has managed to hold this gain and formed a bullish candle. So recommending to go long with a stop loss of 385 and expecting it to move towards 415, 420 zone.
Gaurav, Bissa, your top call?
It would be Reliance Industries, the kind of data it has seen and the kind of retesting the breakout it has seen. I expect a good up move coming in. So one can play for 1370 for the immediate target, and if that is sustained, 1400 plus levels can also be expected.
Gaurav and Chandan, stay on, gentlemen. We'll just want to take your opening thoughts post-market open and just try and figure out how to navigate through a period wherein the Nifty Bank is likely to start off substantially lower. So just stay on for a bit. Here's how the markets are starting off. Not too well, I'm afraid. The Nifty Bank in particular, about 150 odd points. The other two benchmark indices seem fairly flat. So Sensex, not too much of a move. The Nifty 50, about 26 odd points. So nothing dramatic out here. In fact, the Nifty Bank too, after having that brief 150 point downtick, now just about 1/3%. Not a bad start, in the red on expected lines. I think the mid caps and the small caps too would have started on a flattish note. So the mid cap index 35 points in the red, the small cap index very flat, maybe margin in the green, but nothing to write home about. Bring up the heat map then and let's see what's happening. Almost even Stevens, maybe a bit more to the red, but let's talk about the gainers first. Wipro about 1% higher. In trade, Yes Bank marginally higher. It was a top gainer, by the way, in trade yesterday, up another nearly 1%. Heavyweights include Infosys marginally higher, Reliance Industries marginally higher, some gains to maybe a Kotak Bank, but those are few and far in between. And yeah, so select private banks. Yes, Kotak Mahindra Bank, IndusInd Bank, etc. are all doing okay. What's not doing well? Hindalco about a couple of percentage points, Adani Port about 1% lower, Eicher Motors about 1% lower. So autos have turned back a little bit, and the HDFC Twins are in the red. Both of these stocks are clearly putting that pressure on the index. But a ho-hum kind of a start. Just a couple of trend makers, then want to highlight some top movers from trade yesterday, companies which are in focus today. Just one stock that I want to highlight out there in Vodafone Idea. But firstly, yesterday's key movers, Indiabulls Real Estate, big move yesterday, up another couple of percentage points in the session today. First source, Rakesh Jhunjhunwala has upped his stake, is what the exchange releases seem to suggest, up another couple of percentage points. Ashok Leyland, big 5% up move yesterday in today's trade. Not so much, very quiet in trade. What about Vodafone Idea though? Has had 2 good days. Rights issue opens today, about up another %. So 17.10 for Vodafone Idea in the session today. Devina, what are you spotting?
The Praj Industries for one, that's got a big move in early morning trade, about 6% higher. You already highlighted Indiabulls Real Estate, but that's the second top mover on the Nifty 500. AB Fashion, that's up around 2%. You've got GE Shipping, Mahindra CIE, 2% higher. Yesterday's move, you saw ITI also moving up. Remember, they gave a quarterly update. Their turnover at 2,000 crores. Management was positive about their order book positions for Q1 as well as Q2 of FY20. Today's session, though, not really doing a whole lot much, so just about 1.5% lower. Uflex is up. Dilip Bilcon is up 1.5%. Bajaj Electricals is up. VIP Industries, Persistent Systems, Inox Leisure. Inox Leisure last 7 days has not really had a great run. In fact, has been down. Group Finance, which has been up 7% in the last 1 month, has gained some lost ground today. Tata Motors DVR continues to move up. Last 7 days, Tata Motors DVR in tandem with what Tata Motors has been doing is up 8%. NIIT Tech, NIIT Limited, both these counters. Remember, NIIT Limited, the last 2 days has not been bad. NIIT Tech didn't do a whole lot much. NIIT Limited also today is flattish. Tech is up about 6.5%. 0.3%. Broader market performance, 483 stocks advancing, your 583 stocks declining. So almost at an even keel, and no real trend here that you can spot in early morning trade. But I have to just give it some time to see how the morning trades shapes up.
Opening thoughts. The Nifty Bank too has recovered a bit of lost ground. Chandan, Taparia, you started off the conversation saying that you would be comfortable buying the Nifty at declines. I believe you wait for some more downside before you initiate that call?
Yeah, I think it seems that now not much negativity clearly visible. It managed to hold near to 30,000 zone, and if it remains here, I'll put support stop loss of 29,800 and will play for 30,250 kind of level. Similarly, Nifty also witnessed some dip, and I think some bargain buying could be there, and broader trading range could continue. So can buy here or can aid more on a small dip, and expecting again market to go into the blue territory and recovering of more than 30-40 points in Nifty and 100 points in the Bank Nifty from current levels.
Okay. Gaurav, Bissa, any thoughts on open? It's been a very, very flat start. Anything that stands out for you?
No, as far as indices are concerned, we are waiting for a dip. As Chandan mentioned, that the supports are a little bit lower levels, so I would wait for a small dip. And as far as trading is concerned, I think Repco Home is one that should be on everybody's radar. Among the NBFC or the HFC space, this is one that is looking one of the most interesting. It gave a breakout. Yes, it witnessed a strong up move already, but as long as it's trading above the levels of 430, 435, it can head towards the level of 500. So I would not play for a day or two, but if somebody can hold for maybe a month, this is the name that one should be having on radar.
Okay. The other stock which is moving around is Z Entertainment. Chandan, Taparia, a thought here. It's been bobbing between these 410 to 420 mark. What do you do here?
See, the medium-term trend is in pressure, but short-term trend is finding some support at lower levels. And the way it is respecting to 400 things, some recovery could be seen. But I'm not much comfortable here. It may bounce to 420 to 25, but again, selling pressure could emerge at higher zone. So if someone is interested to play bounce back of 2.5% can go. But otherwise, my suggestion is better to avoid or exit the position if any bounce back happens in the counter.
Gaurav, Bissa, anything else that other than the stocks that we've spoken about and the stocks that you mentioned as your trading ideas that you're going to be watching out, maybe not for an intraday play, but over the next 2 or 3 trading sessions by the end of the week, that's something that you can see a trade forming in?
I would go for SBI. It has seen a very, very strong pattern. We saw a strong consolidation between 260, 300 odd levels. A lot of writing was happening in 300 call option, if I'm not wrong. 300 call option and the highest concentration for 4 to 5 months in a row. It's not trading comfortably about those levels. 305, 307 was the level where we saw a breakout also happening as far as daily charts are concerned. Yesterday, if you look at the low, it was exactly the same level. It made a hammer. So it's a positive pattern. And it towards 310, can you keep a stop of 300 on the upside? 340 to 350 is what I would be looking out for.
Okay, we will watch out for those names. Keep in mind, stocks like Sterlite Tech continue to remain under pressure. There is also stress on Dish TV, and Century Plies reacting down about 3% on the back of that downgrade that it has gotten. Lastly, Lakshmi Vilas Bank, 4.5% lower in trade. Final question, Chandan, Taparia, to you. Dish TV, liquid name, under pressure for the last 2 days. We spoke about Z. What about Dish?
Yes, I think the stock failed to surpass immediate hurdle zone of 40, 41 half and continuously making lower top, lower bottom. It's also slipped below its 50-day exponential moving average. So I think the negativity or the pressure is clearly visible in the stock at higher zone. So as of now, it can slip to 34 level, and below 34 even the more downside could be there. So not much can go on the selective media counter as of now.
We'll leave it at that, gentlemen. Thanks so very much for joining us this morning with your ideas, Chandan as well as Gaurav. Bringing in important market voice then, Mahesh Nandurkar, India strategist at CLSA. He's joining us on the show this morning. Mahesh, good morning to you, and it's great to have you here. I just want to first, comment on, CLSA's outlook on the Indian equities, which probably pegged the Indian markets and the Nifty target somewhere closer to 11,000, 11,500. We're right there currently. Does the current excitement and the money that has been coming in, the liquidity that's there in the market, change that outlook for the rest of the year?
Yes, a lot has been driven by the investor sentiments, and what has happened over the last 3 months is two things. The global investor sentiment towards emerging market has improved significantly, and also the sentiment towards India has also improved significantly. So we did take cognizance of that, and we did change some portfolio allocations, and we did turn more optimistic on the markets about a month or a couple of months ago. But the thing is, we still believe that the valuations are in the higher territory. The market, the Nifty still trades at about 18 times on a 1-year forward basis. Also, the data points from the from the bottom up basis at the broader economic level, or even from the individual companies level, doesn't appear to be all that great. So there's a bit of a mismatch between the investor sentiments and the bottom up economic data. But I guess what ultimately matters for the stock market performance in the near term is the investor sentiments. Those are clearly on the positive side, and we therefore expect the markets to continue to do well at least over the next few months.
Does it change your target on the index in any way?
Yes, so I would be looking at the index moving closer to sort of 12,000 or maybe a little bit beyond that over the next few months.
Okay. The other point being, now that we've got elections around the corner, a 21 global investor survey conducted suggested that it's not just about the result of the election now that matters, and whether or not the Modi government comes back into power with a majority or not. It's more about the focus and the agenda with regards to the economic pickup and the growth that needs to be focused on, bringing back jobs into the economy, and a broader perspective as such. Would you say that all of what we've seen in the last 1 month is a precursor to the election results being baked in, and that could actually reverse if the results are not favorable?
Yes, I think the market is factoring in more stable government at this point in time. Clearly, the market is factoring a higher probability of that. I wouldn't, however, say that it's fully baked in as yet, because it's never done till the time it's done, as we have seen many a time in the last sort of several election cycles that we've seen here in India, not just in India, elsewhere in the world as well. So I would say yes, now the market is building in maybe like a 70, 75%, 80% chances of a stable government, but not fully baked in as yet. But having said that, I would also say that the market rally that we've seen here in India is not attributable only to what's been happening within India or the political sentiments, etc. But a large part of the rally is also associated with what's been happening globally. I mean, you look at the Asian indices, or even the global the MSCI World Index. All of these indices have done very well over the last 4-5 months, up between 10% to 15%. So India is not the only market. So I would say a large part of the rally that we've seen is more due to the improvement in the sentiments of the global investors, due to global factors, like now we are building in a probability of a possibility of a rate cut, in the US. We're also sort of talking about the European Bank, ECB also going very slow. We are also looking at a possibility of a resolution between the trade conflict between the US and China. So there are a variety of global factors which have also turned favorable. And yes, the improvement in the political sentiments here in India has also added to that.
Mahesh, good morning. Neeraj here. What do your large global clients tell you when it comes to putting money into India? I reckon March was more about ETFs coming in and not dedicated long-only funds coming in. What do they say? Are they comfortable putting in post-May if there is stability, even if the valuations are high, or are they skeptical and waiting for a bit of a pullback on values before they decide to put in money? What's the nature of those conversations?
Well, good morning, Neeraj. The feedback from the global investors continues to be that the primary concern on India is valuations. I mean, let's face it, as compared to an average P multiple of say around 15 times or so, we are about 20% higher than our historical averages. So that clearly is the source of worry, and many good businesses which the investors want to own are trading at a very high level of P multiples, especially on the consumer side, the discretionary side, and the multiples are like 35 times, 40 times or upwards of that. So that remains primarily the concern. The second incremental concern is coming up on the back of the consumption slowdown. I mean, we have seen the numbers from the auto companies being weak, and there have been some commentary made by the consumer staple companies as well. So in that respect, what we see in the March quarter results and the management commentary, I think will play a big role in determining which way the growth is looking like, and the investors are quite and rightly focusing on that. On the positive side, obviously, if we get to see a stable government, there is that much more predictability on the FY20 earnings growth, and there's going to be continuity of policies. So yes, I mean, it's a mix, and my sense is that and just to repeat what I said before, while the market has factored into a great extent the possibility of a stable government, but there can still be some upside as we get closer to that event.
The other question, Mahesh, is if indeed the markets are expensive and your clients, or largely clients for a lot of other broking houses, might be worried about valuations, are they comfortable putting money into the side pockets? Because I mean, I remember your conversations with Devina at your conference, wherein you guys spoke about a lot of non-nifty themes which could do well. Real estate, for example, has done remarkably well. There is a bit of a recovery that's happened in some of the NBFC stocks as well, which had gotten beaten on IIFL. No nifty presence, but moving up. Can money come into the side pockets, even if the market doesn't move too much post-elections as well, because it stays overvalued?
No, that's true. There will be several bottom-up ideas. There are a few mid-cap companies which are also looking attractively valued. Some of these are on the EPC contracting side. Real estate, as you rightly mentioned, this is something that we've been very excited about. And we feel that the listed real estate companies are getting the twin benefit of one, the industry consolidation. So even if the broader housing market does not do well, the listed real estate companies can do exceedingly well. In fact, we are seeing that in the quarterly numbers and the pre-report that we've seen for the March quarter as well. And secondly, we are also quite optimistic that eventually, give another 6 months or so, the broader housing market will also stage a recovery. So real estate is one segment that we continue to stay very, very excited about. And yes, there will be some like similar other small mid-cap companies as well. But I guess that will be a more bottom-up call and more company-specific.
Your recent report suggests that you need to start focusing on the interest rate sensitives and the interest rate regime now, where most of the central banks have given very dovish commentary, and we are on a declining trend and a declining path towards interest rates cuts. What happens then with regards to the financials here in India?
Well, we believe that the two straight back-to-back rate cuts that the RBI has done, and if you look at the commentary, that still leaves more scope for more policy rate cuts going forward. We believe that the inflation outlook or the CPI number, let's say 12 months down the line, would still be hovering at about 4% or thereabouts. And our own analysis suggests that the food inflation is likely to remain at a lower level for structural reasons. Yes, there could be some seasonal and intermittent volatilities, but if you take a 1 year, 2 year view, the inflation should stay stable, and that would leave another 25 to even 50 basis point kind of rate cut by the RBI in the near term, and maybe more as we go ahead. So that clearly makes the case to own the interest rate sensitives here. I mean, we talked about property as one of the key interest rate sensitive. Banks and financials is the other one. And there clearly, I would say that the kind of wholesale funded institutions would probably see more benefit of the falling interest rate environment. Obviously, the other big theme which has been unfolding in the financial space is the peaking out of the NPLs. We are very much on track of that, and my sense is the corporate banks, the private corporate banks, also a select state-owned corporate banks as well should also continue to do well going forward.
All right, so while when we talk to most market participants, it is the big theme, the broader theme that will lead the rally going forward is going to be financials. You also spoke about some side themes that are probably not big index names but have done well and they're likely to do well. Anything else, Mahesh, aside from the financials, which are going to be the big theme driver? And if you differ from that, obviously, your comments most welcome on that as well. But what other themes are going to lead the run-up? Is it going to be a consumption theme? Is it going to be an investment theme? What's it going to look like?
Well, I would say that, if I take a slightly longer term view, say over the next 2 to 3 years, or thereabouts, what I clearly feel is that, there is likely to be a big change in the market sentiments, away from consumption theme and into investment theme. We have seen the consumption theme playing out very nicely over the period of last more than 5 years now. And I think now, my sense is that the GFCF, the gross fixed capital formation in the country, has bottomed out. The investment cycle will begin to show some signs of improvement. And my sense is the investors should be gradually looking at making that shift, in the portfolio as well. So, I mean, we talked about financials, mostly on the corporate side. We've kind of talked about, property. In fact, property is going to be one of the biggest beneficiaries of this, investment cycle upturn. The others would be the select EPC contractor names. Cement is also going to be a theme that will do well. And, incrementally, as the households begin to kind of, save more and invest more, naturally there has to be some small level of moderation on the consumption side, and so that's point number one. And point number two is also on the P multiples. The P multiples on the consumption side are at an elevated level, and the primary reason for that has been the lack of opportunities in the other segments of the market, primarily on the investment side. But as that part of the economy and that part of the market begins to do well, I would say money will also begin to slowly shift or reallocate more towards the investment themes that we just discussed. And so to that extent, over a medium term, let's say 2 to 3 year perspective, we see the probability or the chances that the consumption theme might underperform.
Would the underperformance be a factor of a time correction, Mahesh, or could it also be that the volume growth numbers which have been cranking up all through the last 3, 4, 5 years might come off as well?
Well, maybe a combination of both. Maybe it just happens by way of time correction. That's also quite possible. That if you are looking at the earnings growth for the broader market to be in the range of 15 to 20% over the next couple of years, and on the back of that, the market continues to move up. Some of the expensive consumer names might just stagnate and might undergo a time correction. But my sense is that if you take a 2-year view, there's likelihood of that theme underperforming.
Other big subset of this wide consumption theme is autos, which has probably already seen the first signs of that slowdown. Now, my only question is, do you attribute this only to the NBFC stress as being the lead indicator? Because I was speaking to an industrialist who told me that if you look at the two-wheeler space, except Honda, from a Bajaj to a Hero to a TVS, have their captive financing arms. Therefore, financing was probably not the reason why the slowdown happened in the first place. It could well have been higher, or petrol prices or something else. What do you attribute this slowdown that we're seeing in the white bucket, not just two-wheelers too? And when do you reckon it can turn around? Is it too soon to even talk about a turnaround?
My sense is it is too soon in my view, because as you rightly mentioned, it's not just two-wheelers. We are seeing the auto sector numbers slowing down across two-wheelers, four-wheelers, tractors, commercial vehicles, and we have seen some of the consumer staple companies have also talked about some slowdown in the consumption trend that they are witnessing. So my sense is that it's not only because of the NBFC related concerns, it's probably a combination of NBFC concerns plus the fact that the oil prices are high. Maybe there was some change in regulations which upfronted some of the insurance costs and therefore increased the upfront pricing of some of these two-wheelers. But I think we still cannot ignore the fact that there could be, we could be looking at some sort of a slowdown in the consumer purchasing behavior as well. And in that sense, as I mentioned, the March quarter corporate results season and the management commentary will be quite critical because that will give us a good idea on whether the slowdown that we are seeing is only limited to the autos, or is it more widespread and visible in the other consumer categories as well.
All right. That's for the auto space. But Mahesh, just one final question. When you're talking about a target of 12,000, are you looking at a particular rate of earnings growth for the Indian equities? What would that number look like? Will it be, the early double digits? Would you look at a number closer to 15 to 18%?
We would be looking at a number close to 15 to 18%, closer to 20%. And one of the primary reasons for that is going to be a big swing that we will see in the banking and the financial sector profitability. You would remember that FY18 and also 19 to an extent has been quite a bad year for these corporate banks and financials with large amount of provisioning costs coming through. Now, a lot of that will not be there for FY20, and the YOY comparison will be very easy. And we expect the banks and financial segment to report very strong numbers in FY20. In fact, we will see strong numbers starting March quarter of 2019 itself. But on an overall basis, we are not really seeing any big pickup as such. If you exclude the banking and financial space, and if you exclude some of the companies which have some low base effect and some exceptionals, for broader market, I would say that yeah, I can hear you.
Yeah, Mahesh. Maybe there's some unwanted interruption. Please finish your point.
Yeah, so the point I was trying to make was, except for banks, financials, and also some of the companies with low base effect, etc. For broader market, the earnings trend will remain similar. But yeah, for on a reported basis for the overall market, the earnings growth should be in the range of 15-18%, driven by the bank's financials.
Pleasure having you, Mahesh. Thank you so much for taking the time out and speaking to us. Look forward to talk to you maybe post the election verdict is out.
Thank you very much.
All right, that's an important market view, Mahesh Nandurkar of CLSA. Let's take a break. On that note, we spoke about how consumption might be hitting some roadblocks. We will have that conversation on the other side. We'll also have a short excerpt from the chat that we had with the management of Vodafone Idea ahead of today's rights issue, but more importantly, speak to Shekhar Bajaj of Bajaj Electricals about the company's retail reach program, growth outlook, and more.
What is the meaning of this word suspense? Suspense is something very intangible. Say we show somebody getting killed. For me, I'm not interested in a whodunit. The moment the audience knows that this person has done it, and he has to ensure that he doesn't get caught, there is a certain tension in that. I try to give away as much as possible to the audience and still keep enough aces up your sleeve. I don't think any director would be able to say, okay, this is my style. I don't think I can define it.
Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out there. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Back with Indian Open right here on Bloomberg Quint. It's very pertinent to talk about what's happening to the consumption space and to speak to industry leaders from various segments to try and figure out how they are feeling about the sentiment right now. Bajaj Electricals, one such company. The revenue from the power business nearly tripled in Q3 from the year-ago period, stands tall to the tepid growth seen in the consumer segment by and large. Companies implementing its retail reach program to revive consumer sales as well. But, as I said, on the indications of a slowdown in consumption, what's the strategy going forward? Let's ask the Chairman and Managing Director, Mr. Shekhar Bajaj, who joins us on the show. Mr. Bajaj, so good having you. Thanks much for joining in. It's very pertinent to get views from industry captains about how the sentiment is shaping up in light of all of this confusion that exists. So, please tell us, before we talk about the Bajaj Electricals, is the sentiment in the consumption space coming off a little bit? The factors could be many, but is it coming off?
I don't think that we are finding such a slowdown as is being stated, because basically the distribution is very critical, and as our distribution has now reached a level where we are in a position to make available our goods across the country. We are covering almost 600 states, 600 districts, and about 200,000 outlets on a weekly basis. So because of that, the demand is something which is not slowing down for us. So we are looking at a growth of 20-25% should continue in our retail space in the coming period also.
Sir, would it be true only for you because you are doing some company-specific things, you have the benefit of some orders that have come in from the government side as well, and therefore that may be helping? But what about conversations that you have with some of your peer groups, not just in the business that you are in, but across the spectrum? Are people talking about some slowing off, some bit of downtrading at all?
See, there are two different businesses of ours. So I was talking about our consumer business because that's what you had asked me. So consumer business is something where we are growing faster than our competitors, because we have implemented this range and reach expansion plan, which is something which required us to take a lot of beating in the last 2 years. But now the benefit is coming because the distribution is in place. We are not dumping materials, the prices are stable. And therefore, the whole idea of a retailer is he's the one who decides what to sell. And therefore, he looks at his return on investment his return on capital employed. So he looks at the ROI for him with Bajaj is clearly much better than it is available with other competitors. That's why he pushes more for selling Bajaj product.
Mr. Bajaj, just in continuation with your last answer and your retail reach expansion program, which you had kick-started in FY16, the last few quarters have actually not seen a very great impact in terms of the primary sales via this particular touch point. Is there a bigger plan in place for the reach here?
No, I think now we have to not further expand in terms of numbers, but we have to get into the depth. That means if in a particular shop we are having 10% of their sale is of Bajaj product, can that be increased to 20%? Can we make sure that they buy on a regular basis our products rather than buying it once a month? We want them to keep very low inventories. Earlier they was to keep about 2 months inventories. We are saying, why do you want to keep more than 15 days inventory so that they can rotate their money 24 times instead of only rotating it 6 times. So even with a 3% margins, they will be able to make a 50 to 75% type of return on investment. So that is our whole game plan, that each one must feel that it makes sense only for them to sell more and more Bajaj product rather than selling our competitors. And that's what is slowly happening. And unless others also give them a better ROI, the retailer is the one, when you go to buy in a shop, he says, you buy any one which you want, but I would recommend such and such brand. And that's what most of us, when we go and buy in a shop, we always do that. And that is what I think we are going to benefit out of that.
And from the company standpoint also, it's a better supply chain management if this model works fine?
Yeah, actually the supply chain is the most critical. So first stage was when we told people to reduce the inventory level from 2 months to 15 days, unless we had a good replenishment model that as soon as they sold off, it should be replenished within 4 to 5 days. If that is not done, then this whole scheme would go into a fiasco, because no retailer wants to lose sales because he doesn't have stocks. So the replenishment was something which has been done very well. They've got the confidence that yes, if anything gets sold, they will get replenished within 4 or 5 days. That's why they've reduced their inventories. So that supply chain is the most critical. I agree absolutely that without supply chain, if you just reduce the inventory, you lose out sales yourself also and your retailer also, and you lose confidence in you.
Right. So let's now talk about the growth potential of both the segments, which is the consumer segment and the E&P segment. A lot of reports are suggesting that, growth of about 20.4% CAGR, which you have been clocking in from FY18 to FY20, is something that you will likely carry forward even in the lighting and consumer durable business as well. Is that a realistic number? And there could be a turnaround and improvement in the EBIT margins as well, which could see an expansion from 7% to 9%.
Over a period of 2 years, because basically even if our margins don't go up, because of the growth in sales, and our overheads will not go up to that same speed, so our percentage of fixed costs keeps coming down, and therefore our EBIT margins or EBITDA margins will go up by 1% per year in the next few years. Every year we should grow by 1%. And that's why what you're saying is from a level of 6.5%, 7% this year, it may go up to 8%, 9% over a period of next 2 to 3 years.
This is just the consumer business?
This is only consumer business I'm discussing. As far as EPC business is concerned, it's very different. EPC business, we got a very big order. Because of that, there's a spike in the growth. We are not really interested that EPC business should expand more than our consumer business. So for the next year, we will, our expectation is the EPC business. This year we are expecting, now the figure is around 2,800 we have done in the consumer business, around 3,800 crores we have done in the, 3,600 crores we have done in the EPC business. Our expectation next year, the EPC business will come down and the consumer business will be, so next year the consumer business will be higher than the EPC business, because this UP project which we have taken will be mostly completed by next year.
You do not believe, sir, that some of the other states might also envisage giving up such large projects? My question is, if the opportunity presents itself, would you still shun it off because you consciously want to scale down the EPC business?
Absolutely. We've already taken a view that in any case, the EPC business has a certain amount of risk. There's a certain amount of working capital which is blocked up in that. And therefore, it should not be normally more than 50% of our turnover should not be our EPC, including Luminaires business should not be, that is B2B business should not be more than 50%. If it's lower, no issue at all. So next year, as I said, that we are expecting maybe 3,500 crores will come out of our consumer business. EPC business maybe around 3,200 crores, which is absolutely acceptable. There's no problem at all. And if there's bigger business, we will not take it, because the risks and the money involved is so high, so it's just not worth it, because there are so many uncertainties which come in. So therefore, but because it is there to make money, as long as it's giving us money and it gives you a good return on capital employed, we'll continue to be in that business. But if it starts losing money, we will stop it. There's no, in our consumer business, we will continue. That's our core business, and that will continue. And for that, we are putting all the effort to create more and more demand.
Got that. Mr. Bajaj.
And new products.
Got that. It was a real pleasure chatting with you, sir. Thanks very much for joining us and highlighting those aspects for Bajaj Electricals there. So consciously looking at scaling down the EPC business and focusing more on the consumer business.
That's interesting. Just a quick check on Bajaj Electricals, the stock, and then on Vodafone Idea, the stock, the two names that we're talking to. Bajaj Electricals 545, flattish in the session. Vodafone Idea, the rights issue opens today. That stock is up about 1%. Remember, Spectrum auctions, in the future may not be as aggressive as Indian telco players look to shore up their bottom line. Vodafone Idea says it is not interested in bidding for more spectrum. Country's largest telecom operator also says that the consolidation in the telecom space has left the remaining players with adequate spectrum with no need to hoard airwaves. Yatin Mota and Sumit Sarkar spoke to the company's CEO and CFO ahead of the 25,000 crores rights issue. Sumit started off by asking the CFO, Akshay Mundra, on how the proceeds of the rights issue would be used.
There's an offer document which says what are the purposes for which the funding can be utilized. First is 75% or roughly 18,750 crores is generally for repayment of debt or interest, and the balance 6,250 crores can be used for general corporate purposes. But if we look at the larger picture, we are saying that there is an overall funding requirement for the company, and this 25,000 enables the company to make investments, particularly in networks and in capacity and coverage, to be able to meet our strategic objectives and also to greatly improve the consumer experience. So from an offer document perspective, there's a certain statutory requirement that you specify, but I would say largely it is funding required to serve our overall strategy and the intent.
Also, if you see, there's a lot of talk in the investor and the analyst community that this fund infusion of 25,000 crore that the company is doing via rights issue won't be sufficient for the company, and it would need another fund infusion going forward for its capital expenditure plans and to contain its leverage ratio. So do you think that the company will actually require another fund infusion after this rights issue?
Absolutely not. So we're very confident that the rights issue plus the Indus monetization and the cash generation from operations is sufficient for us for a long haul. Add to that the possibilities of fiber monetization and incremental revenue uptake through getting more coverage and capacity and taking more customers to unlimited that Akshay was talking about. All this put together gives us a sufficient cash that we need for being able to fructify our strategy that we've talked about.
Companies are not interested for an auction given the financial health of the sector that we have seen. But from the government side and from Reliance, they are willing to do an auction to get the 5G spectrum. So what is your say here? And if at all government goes ahead with an auction, will Vodafone Idea look to participate if government does an auction for 5G spectrum?
So very clearly 5G is needed. Very clearly 5G, India should have a rollout of 5G happening at the right time. Right now, 5G ecosystem still is just evolving. The use cases India specific still have to be developed. We have sufficient spectrum available with Vodafone Idea to be able to create a lot more capacity than we have today. All the benefits of 5G that can today be utilized are already being brought forward to us. We are the last ones to deploy technology on 4G, and the later you buy, better you buy. So we're buying things like massive MIMO, TDD, and building lots of capacities to create the best possible customer experience already. As and when 5G ecosystem develops and the use cases come in, we will sure be able to play. Being a part of Vodafone Group, we have access to cutting edge technology and research of all kinds, and therefore are going to be all set to be able to take part and play a role in the 5G at the right time.
But also, if I may add, you see, why do you need spectrum? You need spectrum, either there's a specific application with that technology, which, as Balish said, is not there. Secondly, you need it for capacity. Now, really speaking, our traffic on broadband today was about 30 petabytes per day. There is a lot more capacity that we can create on the existing spectrum. And when we are giving you our capex guidance of March 20 or FY 19 and 20, we would probably have utilized only half of the capacity potential of the spectrum. So really speaking, from a need perspective today, there is no need to buy more spectrum. As and when we need it, we'll definitely participate.
But what if the government goes ahead with an auction? Will you participate there?
So you see the need, you have to see this differently from the previous auctions. What always happened in the past was there were 10 operators.
Yes.
So if you did not participate and take spectrum in this auction, the next time you may not get it.
Yes.
We've had the last auction where the entire block of 700 megahertz is still unsold. And now the government is planning to sell 5G spectrum. The point is that today's spectrum adequately is available, the number of operators has reduced. So you can buy spectrum when you need it. You don't have to hoard it, if I may say. Okay. You just buy it when you need it.